Welcome to this video on the hidden economics of market share in the paints industry. We'll be covering macro and market intelligence, sourced from official bodies like the RBI and the U.S. Fed. As of 2026, key indicators show the repo rate at 5.25%, Nifty 50 at 23,904, and the INR-USD around 85.5. This video's table of contents provides an overview of the discussion, including a macro snapshot, RBI policy and rate trajectory, and global macro headwinds. We will also delve into market structure, trading strategy, sectoral profile, fundamental valuation, and investment thesis. India's macroeconomic snapshot for FY26E shows robust figures. GDP growth is forecasted at 7.4%, with CPI inflation projected at an 8-year low of 2.1%. The fiscal deficit targets 4.9% of GDP. Strong FDI inflows and positive credit growth support this resilient economy. The RBI policy and rate trajectory shows a series of rate cuts beginning in February 2025, culminating in a 5.25% repo rate by December 2025. The MPC has since held the rate at 5.25% in early 2026, maintaining a neutral stance due to geopolitical risks. Examining CPI inflation and GDP growth in India, we see GDP rebounding to 7.4% in Q4 FY25. CPI inflation reached a multi-year low of 1.33% in December 2025, driven by food disinflation. However, oil-linked inflation risks persist due to the Iran conflict. Global macro headwinds include the risk of an oil shock due to the Iran conflict, potentially sustaining energy inflation. The Fed is expected to hold rates, with the DXY facing compression risk. U.S. CPI has surged, complicating the Fed's easing path, while FII selling is being absorbed by DIIs. Focusing on Fed rate, DXY, and FII flows, the U.S. federal funds rate trended downward. DIIs are net buyers, providing structural support to the market, despite FIIs being net sellers in April 2026. Gold prices are elevated, and the INR-USD stands at approximately 85.5. The market structure section highlights key indices. Nifty 50 is up 8% from its 52-week low. Bank Nifty shows a bearish lean. Sector bias reveals bullish outlooks for IT, FMCG, auto and EV, and real estate. Paints and chemicals are rated neutral due to volatile input costs. The Bank Nifty technical view identifies 57,000 as major resistance and 52,000 as deep support. The CMP is 51,549. Key indicators like MACD and PCR show a bearish lean. The market anticipates a range-bound movement with max pain at 55,800. Our Bank Nifty trading strategy is based on 3 scenarios: bull, bear, and range. The bull case targets 57,500 with a long CE spread. The bear case targets 54,000 with a long PE spread. The range/neutral strategy uses an iron condor, profitable between 55,000 and 57,500. The iron condor payoff profile illustrates a range-bound strategy. Maximum profit is 300 rupees, with a maximum loss of 700 rupees. The strategy is delta neutral and benefits from theta decay. Risk management dictates a 2% maximum capital risk per trade. The sectoral profile for India's dominant paint industry leader highlights a strong competitive moat. This includes a dominant market share in decorative paints, a vast distribution network, and vertical integration. Financial metrics show a robust revenue forecast and healthy margins. The fundamental valuation framework reveals strong multiples, justified by the company's competitive moat. The stock trades at a premium PE and EV/EBITDA. High ROE and ROCE reflect efficient capital management. The DCF implied value is estimated between 2,800 rupees and 3,200 rupees. Our investment thesis presents bull, bear, and base cases. The bull case targets up to 3,600 rupees, driven by RBI rate cuts and soft input costs. The bear case targets rupee 2,200 to 2,400 due to Iran conflict-driven cost spikes and new competition. The base case targets rupee 2,800 to 3,100, assuming steady volume growth and sustained margins. Key risk factors include Iran conflict escalation, DXY recovery, and FOMC surprises. Regulatory and weather risks and new competition also pose threats. This video utilizes data from official Tier 1 and Tier 2 sources. Please review the full disclaimer regarding the nature of this material.